Calling all traders. Do you want to improve your trading skills? We can teach you how to automate your technical analysis. Then make sure you join XM Live Education. The Tradepedia experts are here to share their knowledge with you in brand new sessions. On how to use exclusive technical indicators, you will learn how to use the following: moving average ribbon, Ichimoku Kinko Hio strategy, ADX and PSAR strategy, Bollinger Bands, Avramis River, combining indicators. Created by Avramis Despotis. Tune in every Wednesday at 1 p.m. GMT in XM's Advanced Room. Take your trading to the next level.
Smart traders never miss a beat. Keep your finger on the pulse of global markets with the all-new trading app from XM. Enjoy access to over 1,000 instruments, including Forex and CFDs on stocks, indices, metals, and energies. Place trades on the go with a single tap and benefit from instant order execution and no requotes. Take your trading to the next level with advanced charts and trading tools, and stay informed about the latest market movements with our expert news and analysis. Create, validate, and manage your account, and make deposits or withdrawals all in-app. Who says you can't have it all? Download the all-new XM app now.
Here you have access to dozens of free educational sessions that will elevate your skills and increase your trading knowledge. Get ready for an exclusive live session with our trading experts and tune in every day from 6 a.m. to 3 p.m. GMT to keep learning about trading with us. Enjoy the show.
Hello traders all around the world. Welcome to a very interesting, hopefully a very interesting Bank of Japan panel discussion. My name is Gil. I'm the host in the next hour. We will talk mainly about the yen and the opportunities and the risks in the yen pairs. And I have two experts here with me to discuss this event that we have tomorrow. From me, it's on my left side is Frank Sohlleder, my fellow friend, German-speaking fellow friend, and expert here at XM Live. And on my right side, I don't know if you see it in the same direction, we have Peter McGuire from Australia, CEO of XM in Australia, and host from many, many shows. I welcome you both here, and viewers. Now here, this is an event sent all around the world, streamed all around the world. If you're at XM Live directly, you can put questions there in and ask us about the yen, about the event tomorrow, and we will try to answer everything. Those who are on Facebook, if it's Facebook Europe, Facebook India, and Facebook Global, you can also send your questions. They'll be posted to us, And this is a live event. We will live answer you everything, and hopefully you will get a little bit smarter out of this hour. So with no further ado, I will directly jump into the content. And Peter, I will start with you. I mean,
thanks, Gil.
it's absolutely amazing what happens with the yen. We are on a 30-year low in the US dollar yen currency pair. Although in the last event, there was a historic event where for the first time since 2007, the Bank of Japan raised interest rates. So my first question is, how is it possible that they raise interest rates and the yen continues to slide?
Well, good afternoon and good evening or good morning, wherever you are. Sydney, Australia, having a look and a feel across Asia. And I appreciate being on the show. A couple of things and what we've got to be very mindful of. And let's pull it apart. We did have negative interest rates and we had a rise of 10 basis points. And that took us to zero. So there's the first start of it. We were from a mindset, the situation in Japan and where we're going. Now we've got central banks and we've got the inflation story and you've got high energy prices, all of this factoring in. And we actually did have, blast off with inflation in Japan. Just to give us some sort of an idea and where we've seen, yes, we've seen a yen that's moved from average around about a year ago, 140 to 155. It's now nearly 155.70 at the moment. We've also got to be mindful of where the Japanese stock market is traded, because this is the real context of it all. You've got to look at this. While you've had cheap money, and you've also had a devalued yen against the likes of the US. It's been wonderful for exporters in Japan. Their company performance has been nothing short of extraordinary. The Nikkei 225, of which it took out its all-time high only recently in the last month or so, and it's up 31.5% for the year. These are Japanese, the TOPIX is up 35% for the year, and the TOPIX core is just shy of 40% for the year. So that gives us some sort of an indication. And 5 years ago, so if we're looking at the peak of where the currency was, 5 years ago, the Nikkei was at 22,200. Now, at the 22nd of March, a month ago, it was at nearly 41,000. So we've got to take this into some sort of context. And whilst we've got I think a situation with the Japanese and what they're going to do, I don't feel as though you're going to see a rate move. And I think that they'll be looking at other central banks and seeing what policy is going to be, where inflation's going to take it. Are we going to see the Eurozone and Bank of England do something? Are we going to see the Fed? So I think it's a fascinating situation. There could be some form of intervention. I think that would happen at everyone's been saying it should have happened by 153, 154 at least. But now the way it's moving at the moment, you might see, 160 to the dollar. I don't know. No one knows. Mm-hmm. I put my mind back to 85 and the Paris Agreement, and the yen was at 242 to the dollar. So I remember that fondly. I was only 2 years of age at that time.
So really a very exciting situation where we have the Nikkei rally, the yen is falling, a lot of opportunities. Frank, how do you explain that we had a historic event, Bank of Japan raises interest rates, the yen continues to slide, and is it to stop?
That's a good question. First of all, as well, from my side, a very good morning. I'm sitting a little bit on a different side of the world than Peter, but anyway, also looking into the yen at the moment, of course, very much, because it's probably the most discussed currency that we are having as well at the moment in the sessions. Traders are really very much interested in the yen. I believe the move what they did in the last meeting was a symbolic move they did. They said by that, hey, we are having it in our hands what we are doing. We are observing the situation, we are looking at the situation, and if we want, we can do something. But we also have to regard, and I think this is a key thing that they are playing at the moment. They have they're coming out of a situation in Japan, a deflationary situation. They didn't have an inflation. They wanted to have the inflation coming back for several years, decades. You said it before, since 2007, the first time they did something like raising the interest rates again. From 2007 till date, they were going just lowering the interest rates even to a negative number. So, and now the thing is, they are looking, I think they're observing very, very closely the import and the export situation. Of course, and Peter mentioned that for the companies, for the industry, it's a great export situation. You know, the exporting, or for the importing countries that are taking goods from Japan, it's absolutely interesting to invest, to take money, to take goods out of Japan. But they have to be careful, and I think this is also what they mentioned, observing also the import situation, because of course, on the contrary, and Japan is an importing country as well, the imports for them are getting more expensive while the yen devaluates. And I think this is the thing that they're keeping a very, very explicit eye on, that the imported inflation is not taking overhand in this very moment. And I think if they are seeing, and we see an action of the Bank of Japan, if this is going to a level when they don't accept it anymore. And I did, in preparation of today, a little bit a research back in the yen. I don't know exactly anymore the number when it was, but it was 20, 30 years ago, we had the yen even much weaker than it is right now. So I think there, even if we are very, very devaluated already right now, there is even the possibility that they let it devaluate further if it's going in their favor, that the exports are going well, the economy is like kind of growing good, and the imported inflation is not getting extraordinary high and very uncomfortable for the Japanese people. And I think this is what I can do. So they are in a very different, in a very, very dangerous situation as well on that perspective. They play here a very risky game. It can, but yeah, they could, if they can stop it, if they won't stop it, we will see. I've not really that much of an idea at the moment, but maybe I get more smart as well throughout our discussion today.
Peter, you think the event the last time, and I saw that you were nodding when Frank said that this was a symbolic event, the last event, was it a one-time event, or is it the beginning of a trend that they will start to raise interest rates? You mentioned the exports are doing extremely fine. Frank mentioned imports become more and more expensive. Isn't that what Japan always wanted? They wanted higher inflation. Isn't that just everything, it's going in the right direction?
Well, in a lot of ways it is. And remembering that they're a very proud nation, remembering that you've just come out of a global pandemic, remembering that you've seen a capitulated, if you put your mind back to the Nikkei, and it peaked at 39,000 odd points. It crashed to 8,000, and then it reinvigorated itself and went from 8,000 back to 41,000. So that's an incredible journey that we've seen. At the same period of time, and I put January of 85, we had the yen at 253 or 254 to the dollar. Now, whilst it's here, you've got to think about what Japan imports and what it exports. Motor cars, motorbikes, technology, and all forms of music. If you haven't been to Japan, you've got to visit it. It's the most incredible country that you could imagine. And it's got fantastic, it's got a very aged population. We understand that. You've got a vibrant techno hub. So it's technology focused with heavy manufacturing. And they're exporting all of this, all of these products to a very hungry world at a very reasonable price, considering the value of the yen. So do they really want to? Because if I saw, if you're thinking about this, if you've got people and anyone, take away the currency, but anyone trading the market would be absolutely over the moon, because of what you've seen as far as in the last couple of years. From 3 years ago, you saw the Nikkei, and I've got it written here. 3 years ago, you had 22,000 points. Or sorry, 5 years ago, you now nearly double the value of the Nikkei in that period of time with low inflation. And this is just exponential growth.
But I
So,
just want to mention here, but this is
yes,
yen dominated, right? So the Nikkei
yes,
went up extremely strong, but the yen got weaker. So as a, let's say, as a US investor or a European investor, or also Australian investor, the percentage is not so much because you devalued the currency.
oh, yes, of course, but they're a very proud nation, and it's all about their internal demand.
Okay.
So you're thinking about their own pension funds, their own investors. So it's a feel good measure for the local economy, very much so as far as the Japanese are concerned. And where you roll from here, I won't be surprised to take a 160 handle out before you get some form of intervention. No one knows what's going on in their mind. They keep on saying, oh, we're going to do this and we're going to do that. But this year is going to be an incredible year because we're coming up to 6 months out from an election and in the US. And I think the footprint of everything is going to change dramatically over the next couple of months with energy prices and all of these factors. And they probably are sitting on their hands saying, we don't want to rock the boat here. Let's just keep everything even keel and see how the rest of the year plays as far as central bank policy from the likes of the Fed, who are saying they're going to have 5 or 6 cuts this year, and everything's going to be, we're going to have cuts as beginning in last September. Now you're at March, or they'll push it out to March. That's not happening. Well, it'll be June. No, that's not happening. Now you've got Larry Summers saying, Harvard professor, there's a big chance you'd have the next rate decision will be probably positive. You've got 25, 30% saying that. So it's a very dynamic year. And that's why I think that there's so many moving parts to this.
Fantastic. So before we continue, we will make a short break. Now, again, for those who are watching us through Facebook, you have the possibility to go to the website of XM and directly participate at XM Live. By the way, you will see there not only that we have this panel discussion, but every day we have 8-hour live streaming, live trading on 3 different channels. So try it out, it's free. And after the break, we will be immediately back. Thanks so much.
Trial ending soon? Don't worry, get unlimited access to all our rooms by joining XM.
Here's how to do it from your mobile phone.
Click Open an Account below the player window, fill in your details, and don't forget to tick that box to receive our news. Once you click Register, we'll send you an email. Click the button to confirm your address.
Once done, we'll open your real and demo account automatically. Simply verify your account and congratulations, you've just unlocked a wealth of trading knowledge.
Start your adventure now. Click on the button or scan the QR code.
And here we are already back again, and we will continue to talk the yen, the Japanese economy, which is very, very special, very unique. And Frank, I want to come to you. Japan is unique in multiple ways. It's an island. Islands are always special, but it's a special island. They don't have a lot of immigration, and the population is shrinking. I think it's even Elon Musk said 2-3 years ago, Japan could dry out, like it could really extinct. How does this affect, this long-term effect, how does this translate into inflation and maybe also into the yen long-term?
Well, first of all, I think this it's really a problem long term. I mean, we were hearing Peter was already mentioning the aging population, and we have to think about that. Also, older people at one point of time, they're going out of work. The workforce is going to be minimized, and the question is then, okay, what comes next? Do we have enough new people born in Japan to catch up this? And this is at the moment as well a second topic. We have not only aging population but also like there's not the biggest birth rate in Japan, so that at the end of the day, over a long period of time, the population is shrinking. And if you don't have then immigration or getting workforce in, I mean, how you want to keep up actually the industry in Japan at the end as well, right? They're producing a lot, car manufacturing, technology, and all these kind of things, and you need high qualified people for that. So you need to have educated people, and if you cannot grow them by yourself anymore because the birth rate is dropping or is lower than is at a low number, so how you want to get and keep up this pace, and of course at the end of the day, you know, it will lead the gross domestic product to a lower age, to a lower stage if you cannot catch up with technology, for example, robotics and all these kind of things. And at the end of the day as well, it has as well an impact on the prices as well, because if you cannot sell, how should the price develop at the end of the day? So yeah, I think it definitely has an impact.
Okay, and that would in the long run mean that the yen gets stronger or weaker?
Well, actually, at the end of the day, you have to think about when the yen is growing, there needs to be a demand for it, right? I mean, every asset is growing only when you have a demand for it. But if you have nothing to offer, who has a demand on the product at the end as well? So I would say at the end of the day, we would have definitely not a growing yen in this perspective.
Okay, Peter. So now I forgot what I wanted now. Sorry about that. So are the Japanese in the end forced to let immigration grow? Or is this maybe a situation, a Goldilocks situation? You know, we need less and less workforce because everything is automated. And we see, so maybe it's good that the population is shrinking because more and more robots will take over our jobs. Can be this also a great situation?
Well, maybe that's the case. First off, from an immigration standpoint, yes, they'll have to import labour because we've got to understand the current population sitting at around about 124 million. Now, it's projected to decrease by 30% by 2070. And the population, we've got to look at the aging of it because this is the dynamic that we've got to be conscious of. The average or the median age of Japanese population at the moment is just under 50, whereas in India, it's just under 30, and in the United States, just under 39. So you've got an aged population. That's the median. So all of these people, they need to be looked after naturally from pensions, and that's where you're looking at strong equity markets. And in a lot of ways, I think you'd want a relatively cheap yen, because that is a benefit to the particular the country and the performance of the country to export a lot of cheaper goods against the likes of Germany and those economic powerhouses that were developed or were a baptism of fire. They came out of the ashes of Second World War, was Germany and Japan, both vying for some of the most dynamic growth that we've ever seen with technology over that period of time. So yes, I think it's going to be quite an incredible, 20 to 30 year forecast out. And I won't be surprised to see the yen stay relatively weak against the dollar for quite a while.
I see your stance is it's a one-time event. The deterioration of the yen will continue, and nobody has really a problem with that. So why there is a lot of rumors that the government could intervene, and there's a lot of fear about it. I mean, now I'm talking about traders, right? Traders, they see the trend, but many are afraid to short the yen because they're afraid of interventions. Do you think the interventions is a thing, or it's just thin air?
Well, we're going to be careful what we say here, because if I said, oh, no, it's only thin air, then people go and from a general or personal advice. So I can't use that framework. But I truly think this is a great issue. If you're going to trade a market like this and you're always with the rope around your neck going, they can do something today.
Yes.
Something could happen in the next 5 minutes and all of a sudden there's intervention and the yen swings wildly from 156 goes back to 151. I mean, you could see a dynamic move. Now, I don't know. No one knows that. Only the Bank of Japan, only the government officials, I would say. But that's the issue that always faces anyone trading a market like this against, certainly, you know, from a yen position. And that's where one's got to be very mindful. And yeah, and I can't give advice on that.
Okay.
That's just something you've got to live with, those dynamics of trading.
I know, Frank, that you're trading actively. How you deal with yen pairs? Do you stay on the sideline or
Yeah.
what do you do?
I
Are
mean,
you worried about interventions, or do you say, you know what, it's a non-event?
No, it's definitely not a non-event if it comes, actually. You know, it's a non-event if we are only talking about it and it doesn't come, then we are talking about a non-event, right? But if really they are pushing the buttons, I think then we see really huge dynamics in the market. Do I have to be afraid of that? Probably not. I should be aware of it, that there is something that I could be in the air. And when I'm looking at a chart in the last weeks, I mean, if I'm going really lower time frame, for example, you could got an impression they are testing the water, actually. I mean, this is, you see in the last intraday charts, you see a lot of spikes to the downside. All of a sudden, they're coming all of a sudden very aggressively, immediately are bought back again. But in context of the chart reading, the spikes are very clearly visible, and it has an impression there is short power, you know, behind these quick spikes to the downside. So I yesterday said it's a little bit like the Japanese are putting their toes into the water and testing at the moment how hot the water is already, and or you know, and feeling a little bit how the traders are reacting on what they're going to do. And but I think there is also so there is present a chance that they're doing something, as I said before, if they got a feeling it's getting out of control, if it's getting too fast to the upside, if it's going if the devaluation is going too extensively only in one direction, I think they anytime have the power to at least slow it a little bit down and to get it in a devaluation level that is for the Japanese acceptable.
How do you deal with this?
How I deal with it?
Yes.
Actually, at the moment, to be very honest, the US dollar Japanese yen, I'm not touching so much at this very moment, I have to say, because according to my trading systems, I have to trade it to the long side. I'm carefully, if I'm trading it to the long side, I'm really carefully trying to get them out of the spikes to the downside, so that I'm really buying the bottoms more or less. If I'm at all investing in that one at the moment, I like. This is how I'm dealing with it, monitoring very clearly. I don't have as well actually very direct entry signals at the moment. The last entry signal I had back on 15th of March actually for a long situation, and I think we're coming slowly to a level when a retracement, a natural retracement, might be coming underway, even if they're not intervening actually. But on the other side, one sentence maybe still, I think what they're also looking very much into, because there could be a very natural development as well, that the yen gains a little bit of strength if, for example, and Peter mentioned this also before with the side sentence, if Europe is doing something, if the States are doing something, if they're, because we are seeing at the moment very slow economic growth in Europe, they start to get very concerned about it. We are seeing that ECB is probably going to cut rates in June, and waiting for the PCE data tomorrow, for example, if inflation in United States again is dumping down, if probably, or maybe the job numbers we are getting today in the afternoon from the US, if they're pointing that the labor market gets a little bit hotter or weaker in the United States, we might see as well maybe a bullish, a dovish Fed next week, and they are talking again more dovish, and this could also relieve the yen devaluation a little bit naturally. So, and I think this is what they're playing at the moment with.
So you start to mention that maybe, or you start to hinting maybe that you maybe shouldn't trade the major US dollar yen, maybe a cross pair. Now, Peter, I want to come to you, because the Australian dollar, Japanese yen in the past was the ultimate carry trade because Australia had interest rates that were normally relatively high, yen very low, and people love to trade it. Actually, this changed in the last couple of years. Today, Australia's interest rate is lower than the one of the US. How does any effect in Japan influence the Australian dollar, or does it not have any effect?
Well, from a trading perspective, I mean, I wouldn't be surprised. We had an inflation read come out during the week. This is last week, and it was far hotter than anticipated. And now many traders are saying, are we going to see, or investors, are we going to see the next rate rise or next move from our Reserve Bank going to be to the upside, which certainly homeowners don't want. And we've got, very high food prices and rents and everything going into the mix to create, certain constraints on budgets, household budgets. So the part of it that really probably would be attractive is if the yen, if they don't see any movement there from the BoJ, you see something like, as I just outlined, from the RBA, the Reserve Bank of Australia, to the upside, then I think that you're really going to see a return to that carry trade. I wouldn't be surprised that you really start to see them jump in on it, because and building on in a lot of ways what Frank said, Gil, this is an uncharted territory in so many ways. You've got gold giving up $100 in the last couple of sessions. You've got a capitulated Chinese economy. You've got a Japanese economy that's absolutely roaring if you're looking at the equity markets, and the overall growth is reasonably okay. And you're probably, the outlier is where energy prices go. So these are all impacts that can greatly affect the yen in the short to medium term. And we've just got to see, again, we're in the hands of central bankers from policy. And this is where I think, you've got to be mindful. There's a time to be in the markets and a time to be out of markets or out of particular crosses and looking at other opportunities. And, if you were shorting gold over the last couple of days or silver, I'm sure you'd be thinking, gee, this has just been a glory trade.
It's really unbelievable. I want actually, even though we talk about the yen, I really want also to get your perspective on the Australian dollar, because it's a great opportunity to have you here. And we normally don't have this. Australia is providing, and I see, okay, maybe we have to leave these questions for after the break. We will make another short break. That's what I understand. And I will come back to the question. I want to know actually how, because Australia is a commodity country and it's providing commodity to China, to Japan, to Korea, to India, and the yen is a very important factor here also as well. So I would like to hear really your opinion about the Australian dollar again, compared to the yen, but also compared to the Asian markets in general. But I will leave this for after the break. And by the way, and here I just want also to add that the viewers on Facebook, you have a link below the video. You can click on it and you can join us directly into XM Live. So please feel free to use that. Now, I want to ask, do we have another break or do we continue?
If you enjoyed this live show, you can watch many more for free. Head to xm.com, choose from a wide selection of educational sessions to improve your trading, learn more about us, and ask questions in the chat room. Join us online in the XM Live beginner and advanced rooms every day from 6 a.m. to 3 p.m.